What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is January 22nd of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to spend some time to do a deep dive into the aftermath of yesterday's correction and spend some time to analyze both market dominance and price action itself to see whether or not this is a period where we should be fearful, like most investors and traders are at the moment, or is it a period where we can start to spot some opportunity in the market? Could this just be a mere dip? And could people already be showcasing signs through price action that they're coming in to buy the dip? We're going to be diving into this and more, guys, as well as doing a sponsored review of the benchmark protocol, which is really bringing a lot of exciting innovations into the rebasing space in DeFi when it comes to actually building an asset that can provide that needed stability in the DeFi space for collateral and other assets. So stay tuned for that. You won't want to miss it, guys. I'm really excited about it. So let's go ahead, dive straight into this, and just take a look at the market here as we tend to do. Now, this kind of segues into the topic we're going to be talking about here. And I think, again, things like this can be so underrated, especially for a lot of traders and investors who don't know how to use a lot of the basic tools out there that actually can be really helpful in garnering the trends in the market. So take a look here at CoinMarketCap, right? We've got here over the last 24 hours, Bitcoin, Ethereum, slightly down here. Again, starting to recover a little bit from their losses. But broadly speaking, if you're looking over yesterday's candle, we're still well down here in the sense of these protocols. And over the last 7 days, both generally in a downtrend here from their 7-day performance. What's interesting, though, is that even during this period of time, usually in most cases, we would see the broader altcoin space, and specifically Ethereum here on like a generally 24-hour, 7-day basis, we would be seeing Ethereum and altcoins faring much worse. What's interesting is that whether you're looking at the 24-hour, right, or if you're taking a look at the 7-day here, there's a lot of cryptocurrencies that are still holding up their gains quite well. A lot of these being DeFi plays, enterprise blockchain plays, Oracle plays, the kind of ones that have been tending to lead the market anyways and have been the early warning signs of an altcoin cycle. More risk-taking, more optimism, people coming and buying up the dip for plays that perform strong against Bitcoin and Ethereum. And if we take a look at the DeFi list here, just over the last 7 days, we still have a ton of cryptocurrencies that are still in well over double-digit territory in the DeFi space over the last previous week, even as Bitcoin and many other cryptocurrencies have started to take, at least the large caps in this case, have started to take some pretty substantial dips. So what's going on here? Well, it would be tended that if you were in a fearful market here, if that we were really setting up for some massive correction long term, that, if Bitcoin were to be, going down to 20K or something like that and staying down there permanently for a while, that we would be seeing altcoins charting down as well. But we're really not seeing that. Sure, maybe over dollar terms, things have declined a little bit over the past couple of days, maybe from their absolute peaks or all-time highs. But for the most part, I've generally seen here that altcoins are faring quite well. And in most cases where Bitcoin's dipping, altcoins are slowly but steadily gaining dominance here in the market. They're selling off not as bad as Bitcoin is. And that's really exciting to see that we had this nice bounce off of this long-term support we've talked about, which was support back here and support back here during the previous cycle. And now we have this wedge building up and the momentum has continued here in altcoins. So just to give you a broad index perspective, this is a probably great way to visualize it, you guys. Take a look here at the DeFi perpetual index here. This is something through FTX, basically a broad index here of the DeFi plays in the market. In this case, DeFi plays already had an extremely strong week. They more than doubled their valuations from late December here towards the mid to late part of the month of January. So in less than a month, DeFi pretty much doubled its valuation. Pretty insane. But at the same time, even after a pretty stark dip yesterday, we've recovered over 10.8% here. Pretty nice stuff. How about we take a look at Ethereum here? Ethereum, not faring well as the broader DeFi space here overall, but again, up about 8%. Then we take a look at Bitcoin, which is really far away from those all-time highs. Only getting about 3.38%. And the ironic thing about all this is that, as we talked about in yesterday's video, if you guys haven't watched it, you've probably heard about this whole fear around like a double spend attack on the Bitcoin network. That's a big reason why this sell-off got as serious as it did. Sure, we were building into this technical pattern here in price, or we did break the wedge here, but that story was really the catalyst that led us to fall through the bottom of that wedge. And Even though a lot of it was FUD, it wasn't real, there was no double spend attempt as we talked about, this still has seemed to weigh down price quite heavily, and we haven't seen Bitcoin recovering as starkly as we saw before, which might be signaling here that liquidity is cycling, that focus and interest is cycling into other cryptocurrency plays. Again, we need to see more follow through on this, but overall, this is the kind of signs we see here when, for example, you can see how Bitcoin has declined here, but I can give one of the coins that we've talked about, Uni USDT, for example, right? Uni rebounding most of its decline here from yesterday, up over 10%. And looking like in this case, from the kind of bias activity, if you have, for example, a further set of upside here where you consume the last daily candle and you get what's known as an engulfing candle. So when your bullish candle here, for example, I'll go ahead and pull up the chart. I apologize, guys. It was my webcam came up there. You can see here that if we get the price action outpacing the previous sell side day, if the momentum keeps going here, we're early in the trading day. If things keep going here and you outpace the previous loss in the sense of the candle here, you have an engulfing candle, and that's an absolute sign of bullishness in price, of optimism, of price being able to not only chart back up to that range, but possibly climb even higher to new relative highs. That's what we're looking for here. And a lot of altcoins are showcasing this sign across the board. We can see here Link BTC, for example, now charting back to relative highs it hasn't seen since all the way back in mid-December, as we've started to kind of reverse the trend perfectly here. So we had this kind of sliding period here, then the massive side of the decline. We also had a pop up here and a slight edge upwards. And it's just a matter of really getting above that 70,000 Satoshi range and really popping off. There are a lot of other cryptocurrencies like this. REN as well, for example, almost consuming up all of yesterday's losses against Bitcoin. If you want to look at Uni in the sense of its Bitcoin pair, take a look at this here. Right? Starting to climb up here again, getting right back up to that range, having a U-shaped recovery. After that, the sky's the limit. So again, this is the important thing to focus on, guys. The slow, steady shifts. Don't get too caught up in the fear of the market, because if you do, it can keep you from being able to see whether or not this is something, it might lead you towards a position where you think that, oh my gosh, this is a period of time where I have to take profits, I have to get absolutely panicky, instead of actually just realizing that it's probably a dip opportunity. And I can speak from experience here, guys. That's the trap I fell in previously. I was thinking that once we went up to 40K, that in this case, we were going to see an absolute pandemonium sell-off across the board. And I really should have waited to see what would happen after that first bounce, if altcoins were going to capture some of that liquidity. I think I tried to trade too actively in this case and tried to basically assume that history would play it exactly as it had in the past, where we had about 2 weeks until altcoins really started to fare well. So I thought that they might get dragged down along with Bitcoin. And in the short term, they did. But after that, they started soaring up higher and higher as Bitcoin's been in this kind of sideways consolidation. I think we're seeing more and more of that trend developing here. And as we took a look at dominance again, just to reassess it, we're at 35% market dominance here for altcoins, a really big even level here. I think we've got a ways to go here, guys, right? If we zoom out, our target here for the next actual peak here for altcoins for this cycle is somewhere around 50%. That extra additional 15% is going to mean we're going to have a lot of opportunities in the market to make 5x moves, 10x moves, depending on what types of cryptocurrencies you're talking about. And we're going to make sure that we position ourselves in those plays, so hopefully we can grow our capital in the long term and be able to hold a larger allocation of crypto in the long run. All right, guys, that's it for In Regards Today's market analysis. I want to go ahead and dive into this really interesting sponsor review we have here on the channel. Again, guys, as with all sponsors and stuff, I always try to find projects that I genuinely like. This is one that I've actually put a little bit of capital myself into. I really think the concept is interesting, and it's a project known as Benchmark Protocol. Now, many of you know famously that I'm a big fan of Ampleforth, and this project is aiming to kind of tap into the rebasing space, but offer a lot of interesting traits that I haven't seen in any other project out there that I think actually seriously gives it a fighting chance against some of the larger cap plays like Ampleforth. So without further ado, let's go ahead and dive into the sponsored review of Benchmark Protocol. Alrighty, everyone. So in today's sponsored review, we're going to be taking a look at a project known as the Benchmark Protocol, an elastic supply cryptocurrency that not only services the need of collateral within the decentralized finance space, but also serves as a form of stability in the broader cryptocurrency space as a whole. Now, I know that might sound a bit technical at the start, but just to provide some context, you may be familiar with other rebasing cryptocurrencies like Ampleforth, which are doing something similar to what Benchmark is doing. And the great thing is about the Benchmark protocol is that there are a lot of other rebasing currencies out there in the market, but I have to be honest, Benchmark has done something that I feel is probably one of the best approaches to new forms of rebasing currencies that we've seen since the creation of Ampleforth, which I'm really excited about, and that's why I wanted to have them here on the channel today. So let's go ahead and spend some time to talk about what the Benchmark protocol is. So for those who may not know what Ampleforth is, or what rebasing currencies are in general, or what Benchmark is as a protocol, rebasing cryptocurrencies like Benchmark adjust their supply over time. And this mechanism of rebasing, going up in supply or down in supply, while also making sure that your holding of the community stays the same. So you might get more tokens as time progresses, or if we break away from a certain price peg or certain market variables change, you might also see a decrease in your overall supply in your portfolio or in your crypto wallet. It's in order to try to provide stability and keep the asset at a given rate or peg. Now, the great thing about Benchmark is that it does so many other innovative things outside of not only just providing a price peg, in this case, better than other protocols, but outside of that as well, being able to tap in towards a lot of other different indicators and insights that a lot of other protocols haven't. So let's go ahead and just start here. The first thing that's important to understand is that most rebasing protocols like Ampleforth tend to peg themselves towards $1. And this could be okay because the dollar is the world reserve currency. It's one that a lot of countries rely on. However, pegging yourself to one currency or one particular asset is a really bad idea in the long run. Because if something bad happens to the US dollar, or even if we just consider the short-term decrease in purchasing power of the dollar versus other currencies, that may not be the one thing that people want to peg to. So what Benchmark did in this case, in the sense of their technology, is they're pegging themselves towards a price peg through their Oracle technology of an SDR. Now, an SDR, for those who may not know, is an asset that's issued from the International Monetary Fund, and think of it as a basket of currencies. It's made up of a variety of major world currencies like the Chinese yuan, the euro, the Japanese yen, the UK pound or sterling, and also the US dollar. So what we're doing here is we're aiming to price this asset or peg this asset to something that baskets the performance of a variety of other currencies. And we're able to get a standard dollar range value for this basket of currencies. So we have a relative peg in this case that we're seeking out for the asset. And along with that as well, it's going to be generally much more stable and move and fluctuate less than just holding simply dollars. Now, this is already one interesting component here that I really like about the Benchmark protocol, because I think in the long run, this is going to be really good to be pegged to something that's not just the US dollar. But it's not the real reason why I'm eager and excited about the Benchmark protocol. It's a part of it. A big reason why I love what the team has built is because outside of being pegged to the SDR here in this case, the protocol does something different. It doesn't just peg itself towards a price peg or adjust the supply based off that price peg. It also includes another variable into the equation known as the CBOE Volatility Index, more commonly referred to as the VIX. Now, for those of you who have been long-term viewers of the channel, when I talk about traditional markets, you know I commonly talk about the VIX. It's created by the Chicago Board Options Exchange, one of the largest options markets on the planet, and it's utilized in order to get a sense of volatility in the options markets around the S&P 500. So when there's big spreads in the sense of the orders, the price movements within options contracts for a variety of equities, these could be stocks like Apple, it could be companies like Tesla, all types of different companies you can think of. The broader S&P 500 is seeing increased volatility or spread in the movement of price in a given period of time. The VIX shoots up. And this is a really good signal, broadly speaking, in the market of when there's uncertainty. Right? So we can see here that on this chart here, this is a chart pulled from, I think it's Market Watch, that they have in the white paper here that showcases the change in the VIX over time. And the VIX can be a really good indicator, usually when we see a spike in the VIX, that there's a massive sell-off in the market. There's uncertainty. People are looking for stability. They're looking for liquidity. And more specifically, they're rushing to assets that are going to hold some kind of peg to some form of stability, like the dollar, or in this case, the SDR. And this is what's really exciting here. that the protocol itself will adjust the supply, uses its elastic supply functionality to be able to increase the supply when the VIX is increasing over an incremental period of time, and also to decrease the supply in this case when the VIX is getting down more towards a normalized range or is going below its normalized range, when stability is not as required. And this is really exciting. So we have two different dynamics here that are at play. We are obviously trying to peg ourselves to the SDR to hold around that range in this case, to have mechanisms that get us to where one mark token will be around that range of what an SDR is worth. And then we also have the dynamic of the VIX coming into play in order to try to increase the supply or decrease it depending on the actual market demand here for something like an SDR, or basically a censorship resistant elastic SDR, which is what the mark token is. And to me, I think that this is a really fascinating concept. It's like a lot of rebasing currencies. It's early on, it's experimental, but to me, this makes sense to peg yourself to something other than just the dollar, and then to also provide that wide range of stability. Now, I highly recommend, if you guys haven't already, to read through the white paper here. It was issued back in November. It's a pretty fresh project overall. I always try to bring really interesting early stage projects to you guys. But I gotta tell y'all personally, I put some capital into Benchmark overall because I like the idea. Overall, when you come to the conclusion here of how valuable, in this case, Benchmark's value proposition is comparative to other stable coins or rebasing currencies, it really does check off all the boxes. And I'm glad they kind of proudly wear this because, yes, it has an elastic supply similar to Ampleforth and a few other rebasing currencies, but outside of the fact that it's got some similarities with these protocols, in this case, they didn't do an ICO, IEO, or pre-mine. It was all through a fair launch. They are inflation shielded in this case, similar to Ampleforth, so they're adjusting to the inflation in this case of the actual peg underlying. And then it's also using this metric of volatility adjustment. This is the unique selling proposition here. And I can't think of a better index in this case to utilize than the VIX here in order to help contract or grow supply here for the overall Benchmark protocol. So that provides like a general sense of context here and the sense of the Benchmark protocol. But I wanted to spend some time to talk about the team. If you dive in, you can go to the website here. You can see the different team members here. I was fortunate enough to actually get to chat with a good range of team members in our initial call. One of them is David Moss in this case, who not only has been working at companies like Citi in this case, he's the vice president for the securities and banking group at Citi, which is absolutely phenomenal. But along with that as well, he's worked at companies like PwC, Deloitte, Citgo Group, a lot of major companies here that I definitely think give a good, per se, benchmark in this case, and no pun intended, for the actual team's efforts in traditional financial markets. And along with that as well, we've got Kurt here as well, who's worked for a long part of his career over at Duff & Phelps, which is a large financial company or financial services company in the traditional financial markets. And then the other person I got to meet as well was Shalini in this case. She actually is working at one of the universities in Utrecht, which is in the Netherlands. And outside of that as well, she's been able to do a lot of previous business development and PR marketing. She worked at Honeywell and a lot of other major companies that she's previously worked at in the past. And overall, when I got to chat with the team, I gotta say, guys, I've had a lot of conversations with team members before, and sometimes you just don't sense a good team dynamic. In the case of the Benchmark protocol, I really enjoy getting to talk to the different team members. They all offered a sense of perspective from coming from various different parts of the world and their previous work experiences. And I think that overall they get the concept here of why something like the VIX could be used as an alternative measure in this case, or an additional measure on top of something like the SDR peg for its simple price stability mechanisms that we've seen through elastic supply cryptocurrencies. So again, this is just a brief overview, but there's a ton of stuff you can dive into. So here's what I recommend you guys do. If you're interested in it, you can always consider here that first off, it's tradable on platforms like Uniswap if you want to get your hands on the mark token. But outside of that as well, first off, read deeper into it. Understand why, in this case, the Benchmark protocol could be an alternative competitor to Ampleforth and other rebased currencies. You can read through the white paper. They have the light paper all here in the more section here. You can get a good overview of the overall project. And I recommend learning about the governance system as well. They're actually just enacting another proposal here for the Benchmark protocol that's going to actually help it stay better towards the peg. They're constantly evolving through the governance system, how the actual peg is managed, and overall how it can get back to that stability range and really meet towards meeting its promise overall of providing a stable asset in the market. So again, guys, I highly recommend you do a deeper dive into it. We'll leave some links down below in the description so you guys can dive more into it. But that all being said, I hope you all enjoyed this video. If you liked it, please consider dropping a like, guys. As always, checking out the links down below in the description. And until the next video, I'll see you all in the next one. Take care, everyone.